Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest, and that's Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, so we're talking booze, Constellation brands, Modelo, Corona. I'll tell you, I like a lager. I don't like the hazy IPA stuff, Landon. So this is right in my wheelhouse. But at the same time, you know, the stock's pulled back 21% so far this year. It seems like maybe the tariff impact's already built into the stock. I don't know. What kind of data are you guys seeing from the consumer on this one?
Yeah, I mean, I hope it's built in. If you look at, the history of this stock, it's been pretty sideways until that last earnings report, which was just unbelievable. It was trading around 220, gap down to, I think, close around 180 on that report. Really poor report. And dipped down, I think, 160, and now it's back up in the mid 170s. So it's still significantly lower than where it normally trades. This is generally just kind of a sideways stock that spits out cash to its investors via dividends. And, they've done, fairly well, but recently they're really struggling. You can actually attribute a lot of that, I think, to the wine sales. They're trying to get rid of it. They're trying to sell off their portfolio, which does about 15 million cases annually. But that wine portfolio sales were down about 16% last quarter. So they're struggling. I think they're rightfully trying to focus on beer, which has been their strongest suit. Pacifico's got about 20% growth on a year-over-year basis. There's been a broader alcohol decline in the market that we've seen, but beer's done well for Constellation brands, and Modelo's still the top market share gainer in the U.S., so it's continuing to do really well. However, we've got data that's showing that even that's going to possibly be a little bit weaker. I mean, if you look at where they're at here, they're on the wrong part of this chart. I mean, negative 30% on a year-over-year basis. We're seeing Coors and Miller do much better there at plus 14% with TAP. So I think a lot of what the Constellation investors are going to want to hear is how well beer is doing, and it is the best part of what they've got. But I don't think it's doing as well as it could be and as well as the competition. I think a lot of that has to do with just the economy overall. Convenience store traffic is softer. It's where a lot of their beer sales are made. We're also seeing that a lot of their target demographic, their target customers are having higher unemployment. They're being a little bit more selective with what they buy. And even when they buy Constellation brands, instead of buying single cans or six packs, they're buying the 20 or 24 packs, which, it makes sense for them, but it's not great for Constellation. So even that is just little bitty cuts are digging into this. And I don't know how much the tariffs are priced in. I mean, when you see a move like that in the stock on the last report, and it really didn't move as much on the tariff reports as some of the, a lot of the other companies out there. So it makes me think that it is probably priced in, but we know that they use aluminum cans in almost 40% of their beers. 80% of their sales come from Mexican beers. I mean, there's definitely going to be an impact here. So long term, I love the company. I think that it's undervalued here. Long term, short term, I don't know. I think a lot of woes are priced in, but I don't see a lot of good news coming out of this report based on the data that we've got. Again, beer's their strength, but it's not that strong compared to their competition. And even though they've been steady for years, again, cranking out dividends and doing some buybacks, I think is in the future. They're just so much lower than where they were. I think long term it's a good buy, but short term I just see some continued pain here, although that may be priced in.
Landon, it seems like this company, which features Modelo, Corona, Pacifico, my personal favorite, can't get out of the way of shifting consumer preferences. And Tom mentioned a lot of consumers in the beer category going towards the different premium IPA brands. Wine and spirits have their own issues, you mentioned, but I compare this company in some ways to like Darden restaurants. They are big. They've got a massive portfolio. They're constantly tweaking and adjusting expenses and adjusting to market forces. And this company's going to do extremely well on the other side. But I wish I had $1 for every stock that's $100 off its high lately, Landon. This is another one of them. And macro's an issue, as you know, macro preferences. Except, I don't know about you, Landon, but when the markets are choppy like this, I think some people drink more, not less. But all things considered, I think this is a company that's going to figure things out along the way, keep adjusting and tweaking their portfolio, and they've got plenty of cash. As you know, they can wait it out, much like Darden waited out the COVID problems. Your thoughts, Landon?
Yeah, you're right. I mean, their free cash flow is doing well. It's up 13% year over year. Again, they're just cranking out cash. Absolutely. I think that they have the staying power to do that. But, just looking at what they're doing with wine, looking to sell that off, that maybe tells me that that's not their strategy, right? They're kind of moving with the preferences, like you say. And I'm conflicted on this. On one side, I love a company that has a lot of, pots on the stove, and they can kind of figure out which one works and turn the levers to make sure that they take advantage. But on the other, it can be a little distracting, especially if, it's constantly shifting in a consumer preference kind of way. And if it's shifted away from wine and they sell off wine, maybe wine comes back in 5 or 10 years. Who knows? Maybe not the wine that they're selling. I think they're a little bit low on the price and quality, but it just overall, it can be distracting. It can be difficult to try to manage that if you're constantly tweaking. Whereas some of these smaller companies that just have one product, I say smaller, I mean by number of brands, more focused companies, I should say, that just have one or maybe two real products, they just do everything they can to make that product sell. And so, yes, I know that within Constellation, every division is doing all they can to make that product sell. But at the top level, you've got to divert resources. And of course, they're going to move it more towards beer, which is doing well. But it's tough to always be kind of chasing that consumer preference. So there's pros and cons to the type of model that they have and that Darden has, very similar, as you pointed out. But again, I agree 100%. Undervalued long term. I think that they're way off. But as an investor, if you're looking for undervalued companies, you got a lot to choose from. So why would you pick this one instead of another one? I think they got to try to make that case. I don't think they're going to do a great job of making it. I think that this is one that is probably going to grind back over a long period of time, maybe 6 or 8 quarters to get back up to those low 200 levels. It's going to take a while. That's kind of the way that we see this, just based on the trajectory. Because as an investor, you're deal shopping. I mean, I never thought that I'd be looking at Amazon as a value play. I mean, there's a lot of different companies out there that are very cheap compared to what they were. And if Constellation was the only one, yeah, absolutely, hammer it. But there's so many to choose from. They have to compete. It's the supply and demand. They have to compete for the investor's dollar. They got to make that case. I don't think they're going to make it on this report.
Landon, you mentioned, you guys like this company long-term, based on your data and stuff like that. But, you look at the younger generation. My kids in college, the drinking culture is not the same. They're not pounding brews like I was at that age and stuff like that. So is that a concern, or do you see that in your data? And do you have an earnings score on this one going into the report?
Yeah, I think that there has been a shift, and it was interesting. I think it was a lot of it had to do with the lockdowns. I think that we saw a big spike in alcohol during the lockdowns, but then after it's gone the other direction. And people are always talking about, at least over the last couple of years, more healthy habits, and so. We'll see. I don't know if that's going to hold long term. Probably good for the country if it does, but those college kids got to have some fun too. We'll see how it happens. I'm not really sure. The data that we've got is leaning towards just less alcohol consumption overall. Obviously, that'd be bad for Constellation Brands, but my guess is, this is one of those, lock-in industries that are completely recession-proof. No matter what, it's going to work. I don't think that's going away. I'm betting on human nature there when it comes to alcohol. Earnings score were negative 15. So even with the drop, it's still just, it's not attractive to us. Again, I think a lot of it is baked in, but I just don't see them coming out with anything great because the data that we've got isn't great.
All right. Good data. As always, Landon, appreciate it.
Thank you, guys.
All right. That's Landon Swine, co-founder of LikeFolio, breaking down STZ into earnings.